Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Mark, happy Friday Eve or happy Friday somewhere. We're back in an earlier time, but somewhat unexpected due to some travel woes, but we're happy to have you.
Well, happy Friday in Asia, almost.
That's right.
Actually, it is Friday in Asia. And where I was supposed to be, so we weren't supposed to be recording this, we were supposed to be at Bitcoin Asia, but the short version of the long tail X, like you should never order sushi in the middle of the country. Don't try to get to Asia through Dallas, Texas. Not enough flights. So if something goes wrong, which it did, you can't get there. So I'm here. I'm happy. But because of that, we weren't supposed to be recording. We're doing it Thursday. So no orange today. I have the white shirt on, and I'll show you the soccer game in a second because it's white out. So my son's second football game tonight. So they're doing white out. So I don't have any orange, but I do have the, Bitcoin, on ice, cold storage. So a little whiteout sock game, whiteout shirt game, and I'll change to the white shorts later. But no one needs to see me in shorts on this show. But look, it's been an amazing week. Since we talked a week ago, Bitcoin I think is up 11.5%. Just over 11%. We have nudged back and forth across the 80K line. There are people declaring the bear market over and that we're now on to the bull market. I'm not quite there. I'm not saying we aren't there, but I think between now and October 5th, there's still a chance of a little bit of a post-ebullience letdown. We are massively overbought. I mean, right. We had one of the biggest green candles in history a week ago when this all started. You got the green shirt on in honor of that. So lots of green candles. But the problem was it was because of a short squeeze liquidation.
Right.
We talk about what causes the big drawdowns is unwinding of levered long. Mm-hmm. But what can cause big updrafts is liquidation of leveraged shorts. Mm. And I think there was a lot of, I know there was a lot of that. In fact, the volume chart is crazy, right? It's kind of like this, and then it literally goes almost off the page last week. And it's actually been high volume here for a while, but the RSI, over 70, that's a danger zone. So again, I'm not saying it's going to crash, but I think we have to be prepared for a little more volatility before the long, slow get in the track and grind up for a couple of years.
Yeah, for sure. And I think, Mark, even though you didn't make that trip, what tends to happen is there's a spike when you're in Asia. So we still got that. And this was the
right. That's right.
We got the Asia spike. And this was the first biggest move in 3 years, right? So we started around like 64,000, and then we hit, that magic 80 number. And, this is the market reacting to a lot of things at once. And of course, as we do, we are very quick to try to put a label on what's happening to try to make sense of it. And of course, this was a follow-up to the conversation we had with bond yields and how scary that made people feel. And of course, to me, that also reminds us of Bitcoin being somewhat of a bearer instrument when we looked at what this means for its volatility relative to some other risk on assets. And that's what Bitcoin was also facing, right? Is folks thought that there was not enough of this. It wasn't strong enough of a risk on assets, and people left to more risky things like
It's so
AI.
funny. It's so funny you say that, and that people will call it. It's not a risk on asset. It is a store of value asset. In fact, we now have the highest correlation with gold in the 17-year, 18-year history of Bitcoin. So that's interesting. The second thing is what's happening is, you had this period where M2, global M2 money supply and Bitcoin prices were highly correlated. And then it deviated for a while when, the price went down because of non-economic reasons, the FTX scandal and people getting afraid, and M2 just kept, going along, and Bitcoin didn't. And then Bitcoin caught up, and it was very highly correlated to M2 until October, and then it fell, and everybody's like, see, it's broken. It's not a store of value anymore. It's not like gold. Like, no. The world changed with the advent of futures and ETFs, because now big hedge funds can buy big chunks of the ETF and short the futures. And if they want to get cute, they can short naked the futures and put downward pressure. It's kind of like this whole debate about Druck and the AI and the letter to the Wall Street Journal. And, now you've seen Bitcoin start to move back toward M2. Interesting. Well, of course it should. But we've heard the K-shaped economy, right?
Yep.
The haves and the have-nots. And it basically was a Bitcoin play on that, which was Bitcoin on a skateboard, Bitcoiner on a skateboarder, and fiat on a sled. And fiat was going down because if you think about it, what people perceive is that the price of Bitcoin goes up. Well, no, one Bitcoin is one Bitcoin. Bitcoin has never changed. Just like an ounce of gold, it's still an ounce of gold. What's changed is the dollar value slowly, and Druck said this morning, is what you guys should be focused on is the constant devaluation of the currency gives the illusion of asset prices rising. So you think your house is worth more. You think your 401k is worth more. But that's because you're denominating it in an asset that is slowly being eradicated because governments are addicted to spending.
Right. And of course, Mark, what you're outlining is what's now getting spoken about again, which we spoke about just last year, which was the debasement trade, right? That basically you're betting that government and their borrowing and money printing will erode the value of our dollar. And so investors are going into, and I love this because this is now getting announced all over the internet and into hard assets like gold and crypto. So crypto has been a hard asset along with stocks and real estate that can hold their value. And we've seen obviously gold fetch its strongest climb since 1999, which is insane. And then we also had Bitcoin, as you mentioned, Mark, up 22%. So, this is going to be a very interesting move. And then obviously the convergence of the two is the tokenized stock market, which, some estimates are projecting that can grow into a $5.5 trillion market before too long. And so earlier this month, you're seeing all the big banks, the JPs and Goldmans, they're very active in this market and trading, basically up from zero. And now, I think that's going to continue with a lot of these factors and really something that can signal, a lot of change into the future. And then maybe also highlighting some change, Mark. And I think one of the stories that was pretty big. Obviously, we've been monitoring what's going on with the crypto asset. But Mark, you've been seeing what's been happening with Meta, right? And how now that's actually announced as of yesterday. So we've been kind of signaling that there is going to be somewhat of a changing of the guard as it relates to social media policy. We saw what happened with Australia, other European countries. And of course, all of us who have kids see the influence of social media on things like self-esteem and even test scores. Now there's been kind of this actual dollar figure, which was reported at an $18 billion teen settlement where 48 states in the US have kind of signed on to basically have a payout of 18 billion over 10 years. And what I love, this is a very kind of interesting thing within the story, is that, there is sort of an admission here that some policies will change related to its usage and messaging towards kids. Things like governors about how their usage can be done. But you probably saw this too in the release, Mark, was that 18 billion that's the top line number, but the guaranteed payout is actually 70% at 12.7 billion.
Right.
And to unlock
Right.
the 30%,
Right.
the competitors such as TikTok and Google, they have to adhere to governor limiters as well. But I don't know if you caught this. Facebook announced that they were 2 hours limiting the usage, 2 hours today, which is actually very, very high relative to what kids do. It their average, I think, for a kid is like around 30 minutes. But the way to unlock the remaining 30% is if their competitors agree to 1 hour. So basically half, they're making it, much tighter on their revenue stream. So, it was not a fully, altruistic.
Altruism doesn't compute with those guys.
No.
Look, I think all of the things that you mentioned in terms of the societal impacts of technology are 100% true. But you know what's funny is it's not new. In fact, I was working on this right before we signed on to record. There's a new Time magazine cover of the 100 most influential people in AI, right? And, the commentary on X was, is this a top indicator, right? I'm like, well, yes and no. So I went back and did a little research, and Time has had AI and compute on its cover since 1950.
Wow.
Right? Since 1950. And all through the 80s and the 90s talked about the wired world and the wired generation and kids growing up with too much tech. And so we've been worrying about this for 30 plus years. And yet now we're acting like suddenly it's a new thing. It's not.
Mm-hmm.
And each generation iteratively has had more, for sure. I mean, I grew up with none of it. And then my first batch of kids grew up with very little of it. And my latest has grown up with all of it. And my grandkids, they are totally digital native. And I've said, before, like I joke all the time, my youngest granddaughter, she'll never have one of these, right? She'll never have a leather wallet because she won't know what money is, right? They'll only be crypto in her lifetime, probably. In fact, it's funny. So, my son is playing football tonight. He's getting close to that magic age, 16, and we're trying to decide, what do we do? Do we let him use our car? Do we get another family car? Long story, I actually passed a Tesla. And everyone knows I'm not a fan of Tesla. Like I bought a Kia EV instead of a Tesla just because I wanted to try an EV, but I wasn't going to buy a Tesla. But from what I understand from friends who have Teslas, the full self-driving is arguably pretty darn good.
Mm-hmm.
Now, it costs you money, which I think is a little weird. You buy a car and then you have to pay a subscription. Oh, okay. But I guess it's like paying a driver. And so I thought to myself, I remember myself at 16 crashing not one, but two cars. Not like I didn't injure anybody and I'm still here, but it did cause some damage. Because young boys, how should we say it? We're not so attentive all the time. And so I looked at that. I said to my wife, maybe we should get him a Tesla, and then let it drive him around, right? So he learns to drive as opposed to, I don't think we're going to do it. But it did cross my mind that there'll be a whole generation. They don't drive, right? They get driven.
Yeah. And that might be for everybody's benefit. I somehow entered that conversation with my son, who is going into kindergarten in a week. And he said, "Oh, Dad, Mommy said that when I'm 16, I will be driving." I said, "Maybe 18. He's like, "Okay, 18. So I assume, Mark, it will be a little bit more of a negotiation as we get closer. But for now, he was a little bit more flexible.
Well, no, it's funny you say that, X, because I actually didn't get my license until 17. because of the two little accidents when I was 16. So
slight delay.
It was it was bad.
Yeah. So those, go ahead.
No, I was gonna say, it's just, boys will be boys.
Boys will be boys, and we'll say that the impact here of Meta will be kind of unpacked in the years to come. But basically, that 2-hour limit is a big one. The nighttime block, so no doom scrolling after midnight, no notifications during school hours, and then there's basically these 15-minute screen prompts to encourage breaks. Mark, that's kind of like when you're playing Monster Hunter, and then you get that Nintendo ad that says, how about a walk outside? How about some fresh air?
Yes.
You promptly hit X and you go back to your Monster Hunter game.
And it's funny you should bring up Monster Hunter, because I have discovered the vintage Monster Hunter. So I started innocently enough, right? The handheld version Monster Hunter Now, and I'm like, all right, I'll try this new thing, Monster Hunter Wilds. And I got to tell you, and I'm sure that this is true of other games, like, the shooter games, and the realism is extraordinary, right? The immersion of it. And like even FIFA, even though it's a little still grainy and but they move pretty darn well. And so all of that's gotten better and better and better with the, action capture stuff. But I then went backwards and I went to Monster Hunter World. And I'm like, oh, this is pretty cool, even though it's a 2018 game. So like 100 years ago in video game. But now I've been playing this other one called Generations Ultimate, which is even grainier. But man, the worlds and the monsters themselves are phenomenal. I can't believe it's 10 plus years old. But I do need that break reminder, because I can get lost in these hunts, which is silly. But I can look up and it'll be like, where'd that hour go? That was really fast.
Exactly. It's trying to, get us a reminder of back into, just like the casinos with no windows, Mark. So you never know really what time it is, and you're left in the dark. And, as we kind of like think about, other stories that have been hitting the news, this one is a rumor at this point. So I'll say to the audience that it's not yet confirmed, but sometimes the silence is deafening. And there has been very loud silence from NVIDIA, who is very quick to silence rumors in the past of things that end up not being true. So they have remained silent here. So the latest word is that they have agreed to buy Hugging Face for $12.9 billion in a report from last night. And for those that are unfamiliar, this could be a very interesting move. As we know, Hugging Face was founded like a decade ago, and they're one of the most popular hubs where developers share and download open source AI models. And NVIDIA will have an even stronger foothold in this realm as kind of the space for these open source developer models that can catch up to closed systems from Anthropic and AI. So I think this is, let me say, I think it's a very interesting move, because we know who is feeding the bill for NVIDIA, right? It is the closed model, Anthropic, AI, those kind of players. But then there's a large contingency of other potential upstarts, as well as, kind of a potential whole other side of the market from smaller open-end developers that they could potentially service here. And so, this is just going to continue if it goes through. It's not yet confirmed.
Well, look, this is a very interesting and potentially scary thing, in that, I've struggled. We've had this conversation multiple times at IC. Struggled with the valuation of Hugging Face. I mean, it's a repository of open source models, so there's no real revenue stream. I mean, these guys don't make almost any money. So to have a multi-billion dollar valuation didn't make sense. But this smacks a little bit of Cisco a la 2000, when they bought a lot of competition at really high prices with their overinflated stock. And long story short, they shelved the competition, right? It's kind of like what, Ford and GM did a long time ago back with the American Electric, vehicle company. It was the number one car company in 1903, and then they put it out of business. So that's the real question. And, NVIDIA, quote unquote, blew out earnings last night.
Right.
Until you actually look a little closer. So they reported 98 billion or 96 billion, whatever it was, of revenue. Well, if you look closer, a whole bunch of that, and I think it was almost like 2/3 of it, they actually haven't gotten paid. Right? They say, well, if they haven't gotten paid, how did they book the revenue? Oh, this is interesting. They guarantee the payments. So they're renting their balance sheet, guaranteeing OpenAI and Anthropic payments that haven't been made for chips that haven't been shipped to data centers that haven't been built. Like, well, then how is that revenue? Well, it's the same thing. Are they buying Hugging Face so that people don't use open source, open weight models, so that OpenAI and Anthropic can actually maybe make some money? Because OpenAI owes NVIDIA $45 billion, which they don't have, right? They don't have $45 billion. Right. They don't even have $4.5 billion. So where are they going to get that, and how? So it's all becoming very sinister and circular. And someone else tweeted the picture, and I don't know if it's real or AI anymore, but Jensen supposedly doing some dance yesterday. And they said this has an Enron feel to it. And it does. It does. And I'm not accusing them of being Enron-esque and having it all be fake, but there is a circularity, and I don't understand, and I took a lot of accounting, but I really don't understand, if you actually haven't shipped a chip, how do you book revenue? I fundamentally, like, if I go into a store and I say, I'm going to come back next week and buy that shirt, as long as they lend me credit or advance me credit that says if I don't actually buy the shirt, they'll buy it from themselves, I guess. That doesn't make any sense to me.
Right.
And if it's watching this and saying, Mark, you just don't understand, please enlighten me as to what I'm missing, because I really don't understand how that works.
Well, it's interesting. It kind of speaks to an article that came out, I think, yesterday in the Wall Street Journal. It says, would there be an AI revolution if there was no NVIDIA? Which was kind of an interesting and provocative kind of question, because following up on what happened on that kind of earnings call, you have those larger than life kind of personalities and, words like extraordinary. And I think even Jensen mentioned that if you turn left or right or look up and down, you'll likely find NVIDIA in whatever part of the transformation you're exploring. And so that's a very, wide net that they're kind of casting.
Well,
and of course that circularity.
And because he's larger than life, I guess he's allowed, and I hate to use this word, but it's a lie. And he said on the call, and then I guess doubled down today on Kramer, that tokens are profitable. That's categorically not true and provably false, right? I mean, we know for every dollar of revenue, OpenAI spends more than $1. Same thing with Anthropic. Tokens, yes, they're selling a lot of tokens, but it costs them more to generate the tokens, which is why they don't have the money to pay for the chips. And so, and I find it odd, right, that we collectively will allow, like, our president does it all the time. He says things that are provably false. Like there's video of him saying the opposite, or there's video of somebody saying, here are facts, and that is not true. And yet I've met people who are like, no, that's right. Like,
Right.
It's provably false. And I don't care if you like him or don't like him. I'm just talking about truth or facts.
Yeah.
And I don't like the fact that if you're powerful or popular, you can just say stuff that isn't real.
Right. And so to that point, Mark, the money quote of the earnings call was the projection for 2028 fiscal revenue, which I'm sure you saw, was 70%. And then Jensen goes on to say the money quote, which says that the unconstrained, is significant. So we're just going to have to go work hard to get more capacity. In his response, that basically the only thing that's holding them back is not demand, it's capacity. So that's kind of living a little bit in an alternative reality. And he also, has other claims like maybe this was teeing up all of the Hugging Face stuff, that the world will need both closed models and open models. And that he basically says that I'm fairly certain we're the only platform that runs every frontier model, which is, a very, very, very big claim, as we have seen.
Look, I mean, when you become a rock star,
yeah,
I think life changes, right? I mean, we've all seen the video or the picture of him signing the girl's chest and all. So I get it. Certain rock stars needed to have only green M&Ms, or they needed to have, 5 Diet Cokes, or they had to have, the temperature at 71.6 degrees and not 72, like whatever. So I get that our culture worships, right, celebrity, and we cut them breaks, right? People that are famous can get away with stuff that the average person just can't. But I do think when it comes to money and investing and accounting, I struggle with this every cycle, right? Because John Kenneth Galbraith said it best, is the bezel, right? Which is the amount that's stolen, right? Embezzlement. The bezel always exists. It's either expanding when times are ebullient, or contracting after people have had enough. And the crash leads to the decline, and people say, oh, you mean pricing things not mark to market? Was ever a good idea? No, we need mark to market accounting rules. Okay, fine. So we did that. And then you had 10 years before people could come up with ways to get around mark to market accounting. And so, early revenue recognition rules. It's like I don't understand to this day how stock-based compensation can not count as an expense. Like if you're paying your people in stock or you're paying them in cash, you're still paying them. But one turns into revenue and the other is an expense. And doesn't make sense to me. So, the bezel right now is about as high as it's ever been, right? The amount of non-GAAP accounting, adjusted numbers, like adjusted EBITDA. Remember when WeWork had the, what they call it? Community adjusted EBITDA. I'm like, what's that? Well, the money we spend on our properties isn't really an expense. It's an investment in the communities. I'm like, no, building that wall was an expense. I mean, that wall costs you money, and that money now is in someone else's pocket. You don't get it back. That's not an investment. Like if you make an investment, you get the money back unless the investment goes bad. But an expense, bye-bye. So It turned out WeWork wasn't real, and maybe a lot of the stuff in AI is going to turn out that way too. I actually think it will, but I can't tell you when.
Well, I think we should just develop a new term for it here on Digital Currents. I think we should call it the accounting hallucination. And the
that is upper echelon. Mark. That is upper echelon. X.
Yeah, you're here first. The accounting hallucinations. And they continue, Mark, because we've seen this with the likes of Google and others that will invest in the AI companies and then simultaneously have an expense as well as, or a liability as well as an asset on the way up.
Oh my
right?
God,
So
that is so good, and I'll tell you why it's so good. So, we do the webinars, we do the webinar and do around the world webinar, and I'm getting ready for my next webinar, and it's going to kind of be a state of the creek, like what's going on at the creek. And look, it's been a hot summer at the creek. We've done a lot of deals. And so I was going through, doing an update on all the deals we've done, in the AI space and in the data space and the blockchain space. And I was asking for a summary of the last deal that was done on each. And so I asked, okay, for Blitzy, which is our AI coding company, what's their revenue? And it spit back, oh, they have $1 billion of revenue. And
don't say.
I'm like, huh. And I typed back and said, I am certain that you're wrong. Could you check again? And it said, oh, you're right. I apologize for the hallucination. It actually used the word hallucination. I apologize for the hallucination. Yeah, that's the valuation that they got at their last round, not their revenues.
Wow.
But the average person might not be asking the second question or the third question. I've told the story many times. When the OpenAI first came out, remember I asked it, can we go to Mars? It's like, oh yeah. I'm like, well, no, based on these 4 things, it's impossible to go to Mars. Well, yeah, technically you're right, but we're working on them. I'm like, well, unless you can solve the atmosphere issue on Mars, you can't fix number 3. Well, yeah, technically you're right, but Elon's working on it. I'm like, oh my God. I'm like, but if you just said, can we go to Mars? And it said yes. And you're like, okay, yeah, good. And that's a scary world, right? Where hallucinations are perceived as facts and then requoted or misquoted. And I'm all about using AI now. Like I use it every day. I fact check stuff in real time when we're on a call with people. And it's very useful because it can get stuff very quick. But man, there's a big percentage of hallucinations and errors. And as long as you can kind of suss them out and ask a follow-up, it does a decent job fixing it. And on easy stuff, like back to my thing, I was struggling with a certain monster. Okay. What armor do I need to beat this monster? Gave me the answer. Because why? Because that's a fact, and because it's sourced in Reddit. Because that's the real problem. I think it's like 80-ish% of the training data is from X and Reddit.
Yeah.
I mean, it's some crazy number. And there are a lot of good Redditors. Don't get me wrong. I mean, there's a Reddit for everything. And some of these people, I mean, there's some Monster Hunter players on Reddit. I watched a video of this woman last night playing. And I literally had to ask the AI, I said, that is impossible. I mean, she beat this thing in under a minute that would take me 25 minutes. And I'm like, how is that possible? It's like, well, you gotta have this armor and this skill and you gotta time it exactly right. I'm like, no, that's just not gonna happen. But
yeah, and to quote Reddit on that, Mark, that would be in 2 subreddits, 2 of my personal favorites. That woman would be in both damn, that's interesting subreddit and mildly infuriating subreddit.
No, that's exactly right. Mildly infuriating. Because I was like, wow. Now I could be the dummy, right? Is that could have been an edited video, right? That kind of took out the middle 14 minutes where she was struggling, but I don't think so. I just think, and look, we all know. I used to say when you're watching like the U.S. Open's coming up, when you watch a professional play tennis, you're like, oh, I could do that. Like, no, you can't. No, you can't. And the only reason they can do it is because they've hit more tennis balls in a month than you've hit your whole life.
Exactly.
And yeah, they make it look easy. Yes, they do. But it's not easy.
No.
And
I saw a match, Mark, that I know you're a tennis fan as well. Roger Federer came out of retirement, and of course he had to play the Washington Generals equivalent, which was his old, shall I say, sometimes nemesis, although it really wasn't much of a competition between our old pal Andy Roddick, who came out of retirement, and to the idea that you could just come out of let's say not that intense level of focus and still be good. I mean, they still played incredible. Andy Roddick was hitting 134 mile an hour first serves, and Federer was just blocking them back. And I mean, it's because he's hit it so many times. He has that same kind of awkward, repeatable motion in his serve. But yeah, just something done at that high level is really astonishing.
It's crazy. And I think we actually talked about this one time. It's to that same point is, everyone says, well, I could do that. I could return 134 mile an hour serve. No, you couldn't. You wouldn't even see the ball go by you. You literally wouldn't see it. And you're like, Mark, you're crazy. I'm like, no, I watched the guy at, batting cage say, how hard can it be? Put it at 85. Now, 85 in pros is still slow. Like that's Jamie Moyer slow. That's not 105 or 103 like this one guy is throwing. 85. He hit nothing. I mean, nothing. And by the time you see the ball come out of the machine, it's past you at 85. And most batting cages are throwing 55, 58, maybe 60. I mean, no, 85 is hard. And yet, I could do that. And there was a funny thing about that. It said, if you put a professional baseball player in any other sport, they could do it. Maybe not well. Golf would be hard. Tennis would be hard. But football, hockey, said, put any other player in, at home base and have someone throw a 100-mile fastball. No one will hit it. Yeah, I think that's probably right.
Well, that backs up, Mark, probably another video maybe you saw making its rounds on the internet. Derek Jeter giving some much love to the ill-fated baseball career of Michael Jordan, saying, oh, no, he did not fail at baseball. If you can play Double-A baseball, and the last baseball he played was Little League, he hit 200 in Double-A, and he had a streak of over 300 going towards the end. Most people can play in the majors if you can hit at the Double-A level. So I had a totally different perspective of Michael Jordan's baseball accolades, because if the captain is saying that it's interesting and it is so, then he must know what he's talking about, because obviously Hall of Famer Derek Jeter, 5 rings, yada yada.
Yeah, it's a different game. It's kind of like, investing, right? I mean, we've all been there. It's like, you look at Druckenmiller and say, oh, that's not, well, he doesn't hard. I agree with what he just said. Like, okay, yeah, but he said it and did it.
Correct.
And now you're hearing it after it's worked and you're agreeing. That's very different than, or Tepper's another one. Like, the guy does stuff which at the time everyone else is saying you're an idiot. Like buying Chinese stocks, and then he sells the Chinese stocks and he buys the memory companies. Like, not after they went up tenfold, but before they went up tenfold. And people say, oh, I could do that. Like, no, you can't. And it's why the average person compounds at 3%, not 30%. And not that 3% is zero, but it's not 10 or 12 or 15 or 30. And anyway, I want to go one second back to, I had an interesting lunch today. So I went to the guy who's an advisor, kind of in the same business we've been in for years. And his big thing is what's called goals-based investing. And we had a very interesting conversation, and he drew this timeline, and he said 10, 20, 30 years. And he said, and he works with high net worth families. And he said, the big question we're all having is the multi-generational question, is because the 10 years, that's easy. That's just fixed income or fixed income equivalents like Stretch or something, where you're basically immunizing your goal. right? Goal, I need this money to buy a car, this money to buy a house, this money to go on vacation. You can actually work it out, deposit X dollars, get Y dollars with a guarantee, contractual claim, all good. 10 to 20, you got to take some risk, right? You got to take some equity risk. 20 to 30, you got to take more risk because there's more uncertainty. Just a lot of things can happen in that period. And the stat that's really crazy, and what we'll get to in a second, is over 30 years, 83 or 84% of the companies in the S&P disappear.
Jeez.
Right? And so even if you had a good company, it might not work out. So if you're trying to immunize a goal over 30 years, that's really challenging. And so he got back to post 30 years. There's really only two answers. And this is very interesting because it's the two things we do. He said stores of value and optionality. And the optionality is what we do in venture, right? You're making small bets on very high potential outcomes that also could be zeros. But the ones that go to zero don't matter because they're small. But the ones that have the big optionality will fund that long-term bet. The other part is just stores of value, gold and Bitcoin, that no matter what happens in the world, the currency will keep devaluing and your value will be stored. And like, yes, I heartily endorse that. And if you think about it, you really would want the devaluation portfolio, gold and Bitcoin, maybe some other precious metals, some hard assets, and this option portfolio, which is basically early stage venture bets on the future.
Yeah, and kind of combining those two ideas, Mark, on the accounting hallucinations and venture capital. You have OpenAI launching its second fund from its own balance sheet, $400 million in its sophomore fund. If you recall, the first one was $175 million. That had outside investors like Microsoft. So this is all its own internal money, which I think is, it's going to be really, really interesting because that's kind of new ground, right? Startups don't typically or ever have an investment wing unless they're investment primarily based startups. And here, we're using the venture capital dollars that went to these companies to create venture investments, which is the job of the venture capital.
It's back to circular. And look, if you take out the mark to market gains on the venture investments at Microsoft and Google and Meta in the last quarter, the staggering earnings per share numbers that everybody's ogling over. I mean, earnings as a percentage of GDP are the highest in history. Not the highest in the last year, not the highest in the last decade, the highest in 140 years of history.
Jeez.
Maybe that's not true. Maybe a whole bunch of that, right? Because companies are marking themselves up and it's all interrelated. And look, if it turns out that OpenAI isn't worth $1 trillion, then a bunch of those earnings at all these other companies that claim to own a piece will have to get marked. And again, this happened in 2001. Enron, WorldCom, a bunch of other companies went bust. Companies like Cisco, which had venture capital investments that they had marked up, had to restate. So we'll see how it plays out. But my guess is the ebullience shall pass.
Yeah. Well, speaking of ebullience, Mark, we will go all the way backwards to go forwards in the final minutes that are waning here and look at a beautiful chart, which is worth 1 million words at a minimum. And this chart, Mark, is what's happening with Bitcoin prices in the current moment. And so this here kind of is brought to us by our friends at CoinDesk, but of course you can find this almost anywhere. You're seeing two axes. One is volume and the other one is BTC itself. couple of things that we mentioned about in the opening are now visually represented here, where you kind of see some of these trading spikes. But what I think is kind of interesting is you're seeing this like cyclicality that happens on the volumes. It's periodicity, almost like a little sine curve that's happening. One thing we forgot to mention, which maybe we've said in the other digital currencies, like the changing buying behavior that's been happening in Bassett, where he had the stock buyback or the government bond buyback program was originally going to be $2 billion. It went to $4 billion. Bitcoin went nuts over that, about the kind of the general sentiment of the market. So I guess maybe there was a money quote here, Mark, which we know we love money quotes. This one was brought to us by the global head of digital assets at Standard Chartered, Jeff Kendrick. And he said, I quote, "For the first time this year, there's now a risk my end of year forecast of 100K is too low."
Wow.
So wow. Do you want to talk about ebullient? There it is.
Now, look, I mean, one thing we know about this asset is it tends to over ebullience and over depression, whatever the opposite of ebullience is. But and we've talked about this over and over. It's like humans are going to human, and it's why the Fourier cycle exists. And it appears that we had the washout in sentiment, right? Sentiment was at the all-time low. The retail, selling was at an all-time high. The whale activity was actually at an interim peak, because when price volatility and uncertainty tends to move assets from weak hands to strong hands, so from retail, quote unquote dumb money to smart money. But then what happens is, as the price starts to recover, the retail money comes back, and it FOMOs. And when that FOMO happens in a tight liquidity world, because what happens is the whales have taken their bite and they ain't selling. And so all the sellers were gone, right? They sold, before they sold to the whales. And so now there's only a few krill left, and suddenly there's a feeding frenzy, and that price starts to gap. And again, I'm not saying it's going to happen, but historically it does. And the other thing is 100 is only 25% away, right?
Yeah.
It's not like a 50 or 100% move. And I had this interesting conversation with my 15-year-old this morning. He was looking at a chart, and it was literally a multi-100-year chart, and it looked like the typical hockey stick. And I said, well, it's a bogus chart, right? It has to be log scale. And he's like, what do you mean? I said, well, remember, the difference between 10 and 20 is 100%. 20 to 30 is 50%. 30 to 40 is 33%. So you've got to have a log scale that goes 10, 100, 1,000, 10,000 in order for a long duration to make sense. And then if it still has a bend to it, then it's a really durable trend. But most tend to then end up at more like 45-degree increases. And I think the same thing is happening here. Is 100 sounds like a lot, but it's not a very big move, and that could happen in a handful of days. So I'm not saying it's going to happen, but it certainly could.
No, I think that what you're also saying, Mark, is supported by a couple of very interesting quotes. We'll get one in from Galaxy that says that 11 of the 13 times that BTC USD reclaimed the 50-week moving average during completed bear markets, the bear market low was in. Okay, what does that mean in plain English? Basically means that if you are at a point in which you are at or above the 50-week moving average during one of these bear periods, it could basically mean that now you're going to be in an accumulation phase. And according to Galaxy, that number, that 50-week moving average, is 82,000, right? So we are very, very close to what that'll mean if you're a bull. And then to that point, the other quote, which I thought was very interesting from Jeff Mai, he said, "I'd presume a bull market only after we sustain 100K for a month, and the Fed signals rate cuts, which will still be uncertain."
Yep.
So a lot of wood left to chop, and of course, it's not going to, curtail folks from being, very, very ebullient. More in green for the green candle, as Mark said. And a quote from Maddie Greenspan, the founder of quantum economics, says, "This is generally what bottoms look like. They begin with a short squeeze, a giant green candle, and they start breaking above the tech levels, and suddenly everyone with limit orders waiting for BTC to drop to 40K, they're now rethinking their strategy." So they're better get on board.
It is 100% true that in every market, there's a whole bunch of people that put limit orders in some amount below the current price, hoping that they'll get to buy cheap. And inevitably, it doesn't reach some level, and then it starts to move away. Those people, they wanted to or had to buy, right, as part of their mandate or remit, then they have to chase. And once they start chasing, that's when the cascade happens. And said, I still believe there could be one more kind of cathartic blowout the wrong way, because we're super overbought. That's the only thing that makes me nervous, is when you're this overbought, historically you have a retrace before you start the next move up. Again, not saying that's going to happen, but it likely could happen. And it doesn't have to go below the low, like the low 58.5 or whatever it was. That probably was the cycle low. And there are those who say, well, that disproves the 4-year cycle. I'm like, no, it doesn't. We had a lower high percentage wise, so we have a lower low percentage wise because there's not as much leverage in the system. So get over yourself. That's what a Metcalfe's law curve looks like, right? It's a parabola for a reason, and the increases are smaller mathematically because you're growing a bigger number. But long term, I think we mirror global M2, and that is up and to the right.
Wonderful, wonderful. I guess we will close out on that point, Mark. And we want to thank our listeners, as always, for tuning in week after week. We are getting close to the end of summer, and maybe the start of Bitcoin summer. Who knows? As we kind of transition into Q4, and all eyes on upcoming IPOs. So lots of cool stuff to talk about. We want to remind our listeners, as always, to stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.